back. David Burrows, the man in the hot seat, taking your questions on North American large caps. We have Frenny in Ottawa on the line. Frenny, what's your question for David?
My question is about SNC Lavalin, Dave, and I'd like to know your opinion. I recently bought it at about $38 a share. I'm just wondering whether it's wise to hold on, or is it better to sell? Or do you think the federal government is really going to put money into infrastructure, and I will be happier if I hold on? Thank you.
Okay.
Nice budget tie in there.
Frenny, it's a very good question because it is a topical stock. First of all, from a technical perspective, this is a stock that's gone through quite a long consolidation and bottoming process, and has turned and made a very nice newer high recently. If you look at the infrastructure companies, there's a bit of a bid to infrastructure companies right now. Certainly there's a view that there may be additional fiscal stimulus in the Canadian market. And it's a group that was out of favor. So we always look for groups that have gone through periods of being out of favor, and then look for companies that have made a turn and technically are making higher highs. And I would say that SNC is quite interesting. It's a large cap stock. You know, as a Canadian portfolio manager, for those that need to be in Canada, we can sort of go anywhere, but for those that need to be in Canada, we need big companies to have in portfolios, and certainly SNC, satisfies that. So things are improving there, and I think
I think of the drama of Valiant right now. 3 years ago, the discussion would have been the drama at SNC.
That's exactly right. And this is the thing, is that when there's a big problem, it takes a long time to churn through that shareholder base and have the folks that are unhappy and who've lost money leave, and new investors come in for their own reasons. And so I would say that this is quite interesting technically. It's a big name that could be owned in a lot of portfolios. Congratulations on your entry point. You've made a good purchase. I think you stay with it. We always want to follow along with stop loss, sell discipline. But at this point, there's no reason to think market's weakening anytime soon. And the sector is behaving pretty well.
Okay, we have Wayne in Edmundston, New Brunswick on the line. Wayne, what's your question for David?
Yeah, I've been looking at the forestry sector, Canfor Corporation, ticker CFP. It's at $15.98. I'd like to know if it's a buy at this time.
Okay.
Thanks.
So, Wayne, I have to come at things sort of from my standpoint and the way that we look at the world. And as we just talked about, when a sector's been out of favor, it doesn't mean you don't look at it. But what we do is we look for those companies that are behaving better than the rest of the group, right? Because if a company holds up better than the group through a tough period, then very often when the bid comes back, these are the companies that stand out. And generally, it's happened for a reason. And if I were to look at the forestry group, I would prefer to look at something where I know there's a tailwind. And for instance, I would be more likely, as opposed to trying to pick an early turn in Canfor, which is really just off the lows. I'd prefer to look at something like Stella-Jones, where they're pressure-treated wood for railway ties and utility poles, and a lot of the stuff selling into the U.S. So low Canadian dollar makes them very competitive. I think I'd be more interested in looking at something like that.
All right, we have Patrick in Peterborough on the line. Patrick, what's your question for David?
First of all, thank you for taking my call. I'm a long-time holder of Enbridge. I'm wondering, I need to liquefy my position near the end of the year to complete a real estate transaction. Would your guest hold or sell at this point in time? I'm presently up. Thank you.
So, Patrick, there's a couple of angles to come at this by. First of all, if you look at the history of busts in the oil industry, when you get a bust like we've had, you generally don't see the market bottom and turn around and take off and not come back. So in the 80s once and in the 90s once, you had oil drop 68, 69% over the course of about a year. In both cases, you had an approximate 50% bounce off the bottom. And then the industry had to consolidate for many years to work out excess supply and excess costs. So if you look at the fact that oil bottomed around $26 and recently traded at 39, and you do the math on that, you're not far off that kind of number. So it's not impossible that the market can reset itself and you get a bunch of production shut down, but it's also possible that that production can come back very quickly today, right? So horizontal drilling allows for oil production to come on in 12 or 15 days. So if the price got much above the cost, you're going to see a bunch of production
Everyone's
come
going
on.
to rush back in again.
Right. So I think that we've had a great bounce in a lot of these stocks, and it's given a lot of people an exit opportunity. And I'm not saying that there aren't a few companies that will take advantage of what's going on, but the infrastructure around oil and gas is likely to also have difficulty going forward. So, Enbridge recently did a deal. Everybody knew the deal was coming, and so the stock got sold off leading into it, and it gave a great entry point. You may use this as a trade. I know we bought some on the issue. We'll see how long we're, holders here. But in the end of the day, I'd be concerned about making a big bet about a big renaissance in the energy patch. I'd prefer to focus on the things that benefit if prices stay relatively low, like consumer companies.
Okay, fascinating stuff. We'll be back after the short break. Past picks are up next.